Did you see what happened to the markets after Trump's re-election? Bitcoin skyrocketing, the US dollar soaring, and gold took a surprising dip. But what's really driving these moves? And here's the big question, will they last? In today's video, we're breaking down exactly what Trump's second term could mean for the markets, from gold to Forex, Bitcoin, stocks, and inflation. And here's the really big twist. Republicans have taken control of the Senate and will most likely win the House as well, meaning Trump has a clear path to pass his policies without the gridlock that he faced in his first term. We'll cover exactly why the dollar is climbing, whether stock market surge can keep going, and how Trump's policies could shape the economy. And if you're looking to turn these insights into real trading opportunities, check out the links in the description of this video for our top picks on brokers, prop firms, and our trading courses and how to trade with us every single day. So let's dive into the Trump trade and what his re-election means for investors and traders like you. Within hours of Trump's victory, the markets saw some wild moves. The Dow and Bitcoin hit fresh record highs. Bitcoin alone surged as much as 9%, hitting close to $75,000. Meanwhile, the US dollar index surged to its highest level since July, signaling that investors are betting on strong US economic performance. This rally in the US dollar is one of the main reasons why we've seen gold sell off and oil sell off, because those instruments are priced in dollars. So while that's happening, gold took a hit, dropping nearly 3% as the volatility index fell to its lowest level since late September. The significant factor here is the surge in US Treasury yields, which climbed above 4%, reaching their highest level since July. This jump in yields makes US assets, including the US dollar, more attractive to investors who are seeking stable returns. And it's a key reason why we're seeing renewed strength in the dollar. Investors are also more optimistic about what it all means for the US economy, which is already outperforming. Higher yields typically boost the dollar's appeal, especially for international investors, as it signals, as I said, both confidence in US economic policy and the possibility of inflationary pressures that could prevent the Federal Reserve from cutting interest rates further. Adding to the optimism, Republicans now hold both the Senate and likely the House, giving Trump a near carte blanche to pass his economic agenda. And this is very different from 2016. Without the opposition he faced from figures like Nancy Pelosi in his first term, Trump's policies on tariffs, tax cuts, and regulation can likely move through Congress with ease, adding further fuel to investor confidence. We saw a similar pattern during Trump's first term. You may remember 2017. Bitcoin actually reached its first record high of 20,000. During that year, the S&P 500 surged 20%, and the US dollar index dropped 10%. This is all within his first year in office. This time around, the strengthened dollar, rising yields, and unified support in Congress are setting a very different tone for what could be another term full of economic surprises. This year, stocks have been climbing even before the election, a common trend in election years. The S&P 500 rose 21%, making it the best performance in a presidential election year since Franklin Roosevelt was in office. The Dow wasn't far behind. It's up 12%, hitting its best election year performance since Bill Clinton's re-election in 1996. With Republicans in control of both the Senate and the House, investors can expect Trump's policies to pass quickly, removing a layer of political uncertainty. This has contributed to the lower market volatility, which generally always tends to drop further in the months following election, especially when the incumbent loses, as investors gain confidence in the political outlook and potentially stability ahead. But the question remains, will this calm last under Trump's policies? Now let's talk about what Trump's policies might mean for the economy. His playbook will be familiar: tariffs and tax cuts. But this time there's a twist. Trump's tariffs will be broader and likely higher, while tax cuts may be more narrowly targeted. So what does this mean? Let's break it down. Tariffs, especially high ones on imports from China and other countries, could push inflation higher as costs for imported goods rise. At the same time, targeted tax cuts could fuel economic growth, but they'll probably increase deficits, which could nudge interest rates and yields higher over long term. Long-term Treasury bond yields have already seen an uptick on the heels of Trump's re-election, as investors expect inflationary pressures from his policies. And the high yield has a direct impact on the US dollar, which is rallying, and a direct impact on gold, which is priced in dollars. The Republican-led Congress means that these policies can be enacted with fewer obstacles, accelerating potential inflation impacts on the economy. It's a sign that the bond market is bracing for a period of higher yields and interest rates. So what exactly is on Trump's economic agenda? Here are some of his most impactful policy goals. First, extending the 2017 tax cuts that are set to expire at the end of 2025. Second, further reducing the corporate tax rate to 15% from 21%. Third, eliminating certain state and local tax deductions. Fourth, reducing taxes on tips, Social Security benefits, and overtime pay. 5, cutting taxes on income and payrolls, which funds Social Security and Medicare, potentially impacting those benefits down the road. Trump also plans to tackle consumer finance issues like pushing to cap credit card interest rates at 10%, which would free up consumer capital, and make interest on car loans fully deductible like mortgage interest. He's even proposing a family caregiver tax credit and an aggressive approach to tariffs. So we're talking about 10 to 20% blanket tariffs on all imports, and potentially up to 60% on goods from China. With a Republican majority in Congress, these policies are more likely to pass, meaning that Trump can act quickly on his economic goals. High tariffs on imports, such as 100% or 200% proposed on cars made in Mexico, is not only disastrous for the country, but it could also drive up import costs and push inflation in the U.S. even higher. But Trump also has plans to tackle everyday expenses like gas, groceries, and housing by cutting red tape and opening federal lands for housing projects. On the foreign policy side, Trump's re-election could have big economic and maybe even geopolitical consequences. He's expected to take a firm stance on China, potentially imposing more tariffs on Chinese imports. And he may adjust his approach to the Ukraine war, which could impact U.S. relationships with NATO and other allies. One currency to keep an eye on is the Mexican peso, which has already dropped 2.7% following Trump's victory. With such high tariffs on Mexican goods, we could even see more volatility in the Mexican peso and higher prices on imported products in the U.S. Trump's America First approach in trade and manufacturing could impact everything from car prices to tech goods. With Congress on his side, these aggressive trade measures are more likely to be enacted. So, will the Trump trade last? That's the question we're all asking, right? The markets have responded with a surge of optimism, but it's hard to say if these trends will stick around. Remember, Trump won't be inaugurated until January, so there will be a delay before his policies actually take effect, a full year delay possibly. During his first term, it wasn't until December 2017 that the Tax Cut and Jobs Act was signed. Now, with the Republicans holding both the Senate and the House, Trump faces fewer obstacles in getting his policies passed, so it could happen sooner. This removes much of the political uncertainty, given markets are more confident in the economic direction ahead. But ultimately, the real driver of market performance will, of course, be the economy itself and how it impacts and influences the Federal Reserve's policies on interest rates and inflation. This will be what really drives the markets and the dollar and gold looking ahead. If you found this analysis useful, don't forget to hit like and subscribe. And if you want to turn these ideas into trading opportunities, check out the links in the description below for our favorite brokers, prop firms, and trading courses. Let's keep tracking these market trends together. I'll keep you updated, watch my videos, and I'll see you all next time.